We just don't know at this stage in life if we can take on a rebuild and if we want that debt hanging over us.
Whether you're a renter or an owner, it can be difficult navigating insurance policies and figuring out what's right for you. It's important to pay attention to the details of your coverage and the true costs of rebuilding. I'm now joined by our consumer reporter, Christine Lazar, exceptional, insurance broker Karl Susman, and United Policyholders Executive Director Amy Bach, and Janet Ruiz with the Insurance Information Institute. Okay, this is a really important question for Karl. You're very well versed with everything insurance. Costs are rising, as Amy mentioned. Getting insurance is getting harder. What do people actually need in their policies, and are there things that they can do without? For example, we know a lot of people in California don't have earthquake insurance, but right now, what are the things that you can tell people you need this for sure, others maybe not so much?
Well, it's important to be sure that they have coverage for what's going to be a loss. That's it, simple, just like that. As long as you know what the loss is going to be, buy coverage for that. But with all seriousness, there are some basic things that I think everybody wants to be sure they have. Fire insurance is definitely one of them. No matter where you are in California, and we'll talk to people that say, I'm not in the hills, there's no fire, the house can burn. Believe me, fire insurance is the primary peril. It's the #1 peril that's been around the longest. Properties burn. So fire insurance is one you definitely want to be sure that you have. On top of that, depending on where you are, you might also want to be looking for a flood insurance policy. That could be either purchased through FEMA, which you can get through an independent broker, or you can purchase it through an independent company that offers flood insurance. Again, homeowners policies can cover water damage. However, they will not cover flood damage.
Okay, there's a difference there.
Yes.
Is there anything else in that homeowners insurance policy, though, that you would look at and say, we don't necessarily need that in particular?
Well, I think if you're looking to pare down a homeowner's policy, a standard policy to try and save some money, one of the things you can do is look at things like the other structure. Most policies will come with a percentage that is included for things that are not attached to your house. And if you don't have anything that's detached, like a garage or a swimming pool, things like that, you can look to lower that coverage. Or if you have personal property coverage, again, it's usually a percentage of that dwelling amount. If you look and you say, I don't have $500,000 in personal property, then see about lowering that coverage down as well, because there's no reason to pay for it if you don't have it.
That's really important. I'm so glad that we talked about that. Now, Janet, your members are the insurance companies, and the public perception of insurers right now, it's not so good. So how can the two groups successfully work together to help the consumer?
It's really important to pick an insurance company, look through their websites, find out what they're all about. Most of the perceptions are usually because maybe somebody had a bad experience or didn't get what they thought they deserved. But really, you usually work with an insurance agent, like say Karl, or some companies have dedicated insurance agents. And really developing a relationship with that agent, call them, ask them questions. I think it came up earlier that, people don't always like to think about insurance. So they kind of ignore it. It's like you buy it and stash it away. But now I think we're all seeing that we need to be more involved in our insurance. So really take the time to get to know your company, your agent. Now, if you're in a claim situation, really talk to those insurance adjusters, have lists of questions, really maximize your time with them. So don't go into it as a fight, go into it more as I need to find out all the information I can get.
I hope people are listening to this when you said talk about, find out about the adjusters. For example, are you going to send one adjuster or many? People are experiencing things that are happening right now that they hadn't experienced before. So that's something.
And that's an important part of when you have a catastrophe. So, if it was a single house fire, like Karl said, any house can burn. That's different. But when you're in a situation after a catastrophe, you probably will have more than one adjuster. But make sure you're taking notes when you're talking to them so that you can read them back to the next adjuster. And then ask them, are you putting this in your system? You know, it's really a back and forth conversation. And since it's new to people and they're in a very difficult situation, they've lost everything or a lot of things, they don't think to do that. And so that's what I always recommend is really have good conversations, keep really good notes. And if you have trouble with one adjuster, you can actually ask for a supervisor. So people need to really manage that situation and advocate for themselves. It's better if you don't get angry, but just really talk through it. And I know that can be challenging.
You know, this is a question that I have personally. It's not on, you know, I don't know if anybody called in about this, Christine. This is something that I experienced decades ago. I heard from someone, well, you should just get a broker who represents different insurance companies and they can find the right one for you. Okay, that's you, Karl, right?
That's me.
So now, I'm going to ask, an honest question, is that the best way to go?
It really is the best way to go because at the end of the day, and I used to be a little more wishy-washy, that it depends and maybe you can get, at the end of the day, you want to have choices. My job is to find the best product for consumers, for my client. That's what I do. We don't have to take a circle and try and force it into a square peg because all we have to sell is the square peg. So the idea is to try and find the company that will match the consumer's needs. Right now, the big challenge, of course, is we don't have markets that are available to be able to go to the consumers and say, here are all of the choices, let's find the one that fits best for you. Instead of shopping around, we're hunting. If we can grab something, we grab it. We say, okay, this is what we can find right now. Is this something that will work for you or not?
And Christine, I know you found this as well. Now you really have to take a lot of time to find out, like, who's filing claims anymore. There are many companies, many insurance companies that are no longer taking claims. Is that right? In the state of California.
Not necessarily writing new policies.
Writing new policies.
So our competition has gone down. So now you are often in the position where you call a broker and say, hey, you know, I got a letter that I'm going to be dropped. I need new insurance. And sometimes the brokers like Karl will call around and say, no one else wants to insure you. And then, of course, you end up on the insurance of last resort, which is the FAIR plan, which is a very limited policy and only covers your fire risk. So then you have to get different wraparound policies to cover, say, flooding or you know, a pipe bursting, and that can be really complicated. Also, the FAIR plan has a limit, $3 million, right? I mean, it sounds like a lot of money, but when we're talking about $1,000 a square foot to rebuild, and we're talking about Southern California real estate where everything is very expensive here, it's really not a lot of money, and you're running into situations where people are woefully underinsured because their whole home cannot be covered by the FAIR plan's coverage.
That leads us into this next topic, Christine. A lot of people are underinsured. We're seeing so many people, especially since the Eaton and Palisades fires broke out. According to United Policyholders, more than half of California wildfire victims are underinsured. More than half. The California State Board calls it a crisis of uninsurance. They're looking at claims, the algorithms the state's insurance companies rely on could be faulty. That's another discussion. We received a question, in fact, from a viewer about this very topic, and they wrote, I have home insurance with the VA, but I think I'm underinsured. I need to find out if I am underinsured or not. So the question to all of you is, how can someone know if they're underinsured if, you know, if they think they are, which they probably, in this case, most of us should try to find out. And that sounds like that's a Karl.
Oh.
Go ahead.
Yeah, well, this is the thing, and not to put this back on consumers, but every day the discussion goes like this. Here's the product, here's the amount of coverage and the price. And it's, oh, well, I can get it somewhere else. They're insuring me for less and it costs less. And you have this conversation and you try and educate people that, well, that's not the same as what you're being offered. That's not as much coverage. Unfortunately, over time, that's a bit of a race to the bottom. And that's why we've really gotten to a position right now where so many people are underinsured, not the uninsured people altogether, but people that don't have sufficient insurance. It was a cost savings measure. every day that's a conversation that people will say is, how much can I lower my premium if I remove this coverage? I can get a quote somewhere else, it used to be, with another company, and they would be insuring them for significantly less. So now, when all of a sudden we're having disasters like this, and people are, like Janet said, they're actually looking at their policies that they kind of socked away and figure that that's as good as it needs to be, they're realizing that, oh, you know what, maybe I shouldn't have lowered all of those limits to save a few dollars now when I really need it.
So Janet, you're about to, I'm going to get to you, Amy.
Okay.
But Janet,
I just had
skipped over her.
one simple way to find out if you're underinsured is to look at your square footage and check in with local builders. Most people have a friend or there's a local builder association, and just find out what is the average going rate per square foot. And then you look at your house and go, okay, is my house average, or is it, fancier or under average? And at least do that basic math. That gives you some sense of if you have enough
coverage. Amy?
Well, we feel that consumers should be able to rely on their insurance companies and their sales representatives
To do that.
To do that, since insurers are paying claims, all the time, all around the country, and the average consumer has no idea what it would cost to put their home back, and they assume that, well, I'm paying a commission to a guy like Karl. He knows, right? And if anything, he wants to overinsure me. That's what a lot of people think, right? And so, Janet's suggestion is a good one for the basics, but, the law has been protecting insurers in this context, and so underinsured people often have a really hard time, getting a remedy. And the problem for us is that, we've been trying to tackle this problem for a long time, and, the exact, the 360 value, that's the software that most of the insurers have been using. Well, the insurers know it's not working right? They know that actually average 2/3 across the country have been estimated to be underinsured. So the insurers know this is a problem, but they keep using the same software. And because the law protects them, this problem just keeps going on and on. We can do everything we can to educate consumers and help them. But, ultimately, consumers are going to rely on the professionals to tell them.
Of course, because that's what they're used to. Christine, believe it or not, we don't have that much time.